Nagar, and I am with you with the area of ABFM, that is Advanced Business and Financial Management. In the previous class I'd started with the module B, so today I'm going to continue with the questions of the module B relating to the area of sources of finance. Do you know, when a business needs money, it can get money. They can get money from two sources. One is equity, that is the own funds of the businessman. One is debt, the money that he borrows from outsiders, which they call liabilities. ठीक है ना? In terms of equity, equity means the owner's funds, and debt means the funds that you take from the outsiders. So, and at the same time, the funds can be short term, medium term, as well as long term, right? In accountancy area or in the finance area, we normally have two kinds of things, that is current and non-current. Based upon that, let's talk about the question there. What is the primary objective of the financial management in the bank? Why do we do the management, the financial management in a bank itself, everyone? What's the reason behind it? Why do we take all that pain in a bank? To maximize market share, to maximize customer satisfaction, maximizing shareholder wealth, or maximizing operational costs? When we talk about the financial management in the bank, it is based upon maximizing the shareholders' wealth, the people who invest their money in the bank there, right? We tend to work upon giving them the reward for this. Okay? So maximizing shareholders' wealth, they tend to give them maximum amounts in the form of dividend and improvement in the share price of the asset. Okay, next question. In the context of financial strategies, what does capital budgeting involve? What is the particular role of capital budgeting when we're talking about financial strategies? It manages short-term working capital, evaluating long-term investment proposals there, and determining the dividend policy, and D is allocating the funds to meet the daily expenses. Capital budgeting is basically, see, if I have to buy even a new phone, I look at the features of the phone, for what particular period of time I can use that phone, what are the benefits of that particular phone, what are the repercussions of buying that phone, whether I'll be able to recover the cost from the benefits that I'm getting out of it, right? There are multiple things that I look upon when we talk about this area. So when we talk about in context of the financial strategies, what are these related to? Capital structure is about looking at the long-term investment proposals. For example, if I have to buy a machinery which is worth rupees 80,000, I'll see that if I can reap back the benefits of at least 80,000 out of it, and at least 80,000 would mean break-even point. Whatever I put money in this, I can at least get it back. If I want more, then I'll have to evaluate the long-term proposals. Okay. What is the primary objective of financial leverage in the bank's financial strategy? What do you mean by leverage, everyone? Do you get the particular term? Leverage is taken from the word lever. It's similar to that. I normally look at it that way. If you pull the lever, or you increase the particular thing or decrease it, then what happens is, in a car, if I change the gear, the speed becomes higher, or the speed becomes lower, isn't it? So what is the primary objective of the financial leverage in a bank's financial strategy? Minimizing risk, maximizing liquidity, maximizing profitability, minimizing borrowing. Whenever we take leverage means either we put our money more, or we take money from outsiders. That means it can be both. the debt or the equity. This is all done in order to maximize the profitability of the organization. How can we increase the profitability of the organization? Done? Okay. The next question, this says, which of the following is a long-term source of finance that the banks represent the ownership of interest of shareholders? Visible everyone clearly now? Which of the following is a long-term source of finance which represents the ownership interest of the shareholders? That means it belongs to the business itself. See, वैसे तो there are two things here, but I would say in terms of long-term source there is only one. Fixed deposits is the money of other people, not of a bank there, na. This belongs to the other people who have given money to the bank, isn't it? Then in terms of commercial paper, it's that particular thing only. Commercial paper or the fixed deposits, these are something that bank owes to other people, not the owners of the organization but other people. Then we have preference shares, and then we have retained earnings. In this case, what would be the correct answer? It would be preference shares. As such, retained earnings is also the money which is saved by the shareholders. That means this is the money which they haven't claimed to take out of the business. Okay? So in this case, the correct answer would be the preference shares. Next question, which of the following is a long-term source of finance for the banks that represents a legal obligation to repay the borrowed amount with interest? If I take a loan from the bank, is a long-term source of finance. Yeah. In this case, the bank has taken money from outsiders. It's a legal obligation that he has to pay them back. Fixed deposits are a different scenario, but that is not a loan now. While when we talk about commercial paper, that is a short-term thing. It's not a long-term thing. Then we talk about equity shares. Equity shares are permanent. Equity shares are the soul of the particular organization. Say, I have a soul. The moment the soul departs, I am dead. है ना? In the same case, the moment the equity departs, the business is dead. So equity will be there in any case. So what would be the correct answer in this case? It would be the debentures. ठीक है ना? The answer would be the debentures. Debentures is actually a debt instrument. Done, everyone? Let's look at the next question. In context of the financial strategies, what does the hedging involve? What do you mean by the term hedging, everyone, and how do we specify it here? Maximizing returns on investments, reducing risk associated with the price of fluctuations, increasing debt levels, or expanding market share. What would be the correct answer? Hedging is what exactly? But hedgers are those people who are scared of losses. So they go through a particular transaction, but in such a way that hedgers are looking forward to it. They are trying to minimize their risk. They are having two kinds of transactions, buying as well as selling at the same time. If they are buying something, they may face loss in something, then they will do the same reciprocal thing as well. That means if I am supposed to sell dollars to you for ₹82, I will buy it from someone else on that particular day. So that means whatever profit I am making, that can be set off against the loss that I can face from the other transaction or the counterparty transaction that we talk about. So it is maximizing the returns, reducing the risk, increasing the debt, levels and expanding market share. In the context of when we talk about the hedging looks forward towards risk associated with price fluctuations. We are worried about the price fluctuations, and based upon that we would determine the price. And once we determine the price, then we record things accordingly. What is the term for the process of evaluating and selecting the best investment projects that will create value for a bank? Capital budgeting, capital allocation, capital adequacy, and capital restructuring. Capital budgeting is if I want to buy a new asset, I'll be always worried what is the benefit I'm going to reap out of it after a certain period of time. Then we have capital allocation, where should I put my money? In the project A, in the project B, in the project C, where should I exactly put my money? Then we have capital adequacy. That means if I need some kind of money at this point of time, I should be having that much amount of money all the time. Okay? Then the next point that we have is, this is capital budgeting. Capital budgeting means we are looking forward towards looking at different projects and trying to take up the particular solutions out of it. Next question. Which financial strategy focuses on optimizing the mix of debt and equity? See, the point is, no business can survive only on debt or on equity. You have to take the perfect blend of both of these things. You don't have an option that we can take one thing more or one thing less. No, there is nothing of that sort. You will have to keep both in your account there. That means when we talk about this area, we need to have debt and we need to have equity in the balanced manner. Okay? अब देखिए, it is capital budgeting, capital structure, asset allocation or the cash flow forecasting. Okay, now when we're talking about minimizing the cost, if we have excessive debt, then we will be worried a lot. If we have excessive equity, then we are worried a lot, because these people are gonna ask for money even when it is uncertain. These people are going to ask for loan even when things are uncertain. Ultimately, we will have to be scared about the point there. So it is capital budgeting, capital structure, asset allocation or cash flow forecasting. In this case, the correct answer is going to be the capital structure, which includes the blend of the debt and the equity. Okay? Then what does the term working capital refer to? Acha, what is working capital now? One is fixed operating capital. If I have to pay the rent, then rent has to go every month. Hai na? Without paying the rent, we cannot have that particular place with us and we cannot grow further. Now the next point that arises is that what is working capital management? Managing the long-term investments, managing the short-term assets and liabilities, allocating the funds for capital projects or evaluating financial ratios. What would be the answer? Is it managing long-term investments? Okay, working capital is the money that we use on a daily basis to maintain our business. That means salaries paid to the employees, their wages, the day-to-day electricity expenses, water expenses, all those expenses which we are incurring is covered there. So in this case, it would be managing the short-term assets and liabilities, allocating the funds, or evaluating the financial ratios. If we look at the working capital, it is for the daily functioning of the organization. So if it is for that, the correct answer is going to be managing the short-term assets and liabilities. If a creditor is standing on my head and asking that, ma'am, give me money, I should be having money in my pocket, and I have to manage in such a way that from the current assets, even after I pay the current liabilities, I still should have enough money that can be utilized for my daily functioning or to meet any emergency needs. ठीक है? Done? What is the primary goal of risk management within financial strategies? Maximize profits, eliminate all risks, minimize exposure to adverse events, and increase leverage. Primary goal of risk management. See, risk management is basically you cannot eliminate the risk altogether. One thing is for sure, you cannot eliminate the risks. Risks can never be removed from the organization at all. Every organization which is working is exposed to controllable and non-controllable risks there. They do not have one particular option that it's absolutely fine, hardly a little risk is there, not much risk is there. Those kind of concepts do not work in this particular area. For example, if I am selling foreign currency, then I face the exchange rate risks, right? We face risks related to different currency. Why? If I have company A and I have company B, right? This is in India and this one's in USA. Now USA's economy, if being hit there, they were talking about recession, and they were talking about it can come and all those things. So we were also worried about that. Now, if this particular banking system is affected, it also affects the organization here. If the US dollar value goes down, it is going to affect the India here as well. In terms of importing and exporting, the impact would be different. But the point is, when we see the exchange risk, it is definitely there. Then we have credit risk. If I take a loan, whether I'm able to pay back or not. Interest rate risk. If the interest rate keeps on varying, then just interest rate risk. So what would be the correct answer there? It would be to minimize the exposure to adverse events. ठीक है ना? We always try to make sure that we should be having such a way that we are able to save that particular scenario. Right? Now, let me give you a crux of this entire system. When we talk about the financial structure of an organization, so financial structure can have both my own money and the money that I take from others. That means it can have equity, the shareholder funds, and it can have debt. Now in the area of shareholders, that is the owner's capital, we have two kinds of shares, equity shareholders as well as preference shareholder. Equity shareholders are the real owners of the company because they get the residual amount after making payments to the preference shareholders. Preference shareholder gets preference in two areas. When the organization is liquidating, they get the money before equity, and on daily basis even the dividend is earned that way. So in this case, this is going to be the correct answer. So the point there is that the organization has to see whether it's going to take any loans from insiders, outsiders, if we are looking forward towards debentures, if we are looking forward towards any other format there. So debt is to be taken there, or we can introduce more of our money, not outsiders money, but more of our money is introduced, right? So if you're looking forward to it, then kindly check it out. So this is the end of this particular session. But before I move for in this particular session, go ahead and check it out, our website or app, for further details. So let me www.adda247.com. You can go on to the area of JIB and CIB. Once you go on to the area of CIB, you have to go to CAIIB November 2023. As you know, the CAIIB registration has already started. Then it's way better that you buy the particular courses, and as at the same time you look forward towards registration before time. If you don't register yourself before time, then you may face a lot of problems because you won't get your particular examination center of your choice. So you can take up the course of the CIB Mahapack, which includes the double validity, all the classes there, even the optional subjects. All 5 subjects are covered in it. We are providing you this particular Mahapack for barely 7367.4, and at this point of time double validity is going on. What you need to do is you need to use the particular code, that is SEP80. You have got 161 mock test, 970 video lectures, 216 ebooks, as well as 500 live classes, which includes both bilingual as well as English medium, the revision batches or the past batches which have already been completed, marathon, mega marathon, and even the doubt sessions. So it is including everything that we look forward to if you're preparing for CIB. So you can take up the CIB Mahapack and hurry up now. And don't forget to register yourself in time, everyone. Thank you.